Hello, this is Teresa Oliver with Millennial Bookkeeping and Advisory Services, a data-driven firm guaranteed to increase your bottom line without you making another sale. Welcome to our how-to video series. We will be posting videos every Wednesday to this how-to series. You can find our videos on YouTube at Millennial Bookkeeping and Advisory Services, and also in our Facebook group, Small Business Owners Toolkit. In that Facebook group, you will also find many other resources to help you as a small business owner get through whatever bookkeeping questions or accounting questions or business-related questions you may have. We also post videos every Monday to our Instagram, Facebook, and LinkedIn. Be sure to follow us and check out the videos that we're posting to help you on your small business journey. Today's video is about allocating cost of service. So for service-based businesses, this is something that I do for my clients, and I believe that this will benefit you as well. It's going to allow you to see the cost and the sale as your gross profit. Okay, let's get started. So here we have Craig's Design and Landscaping Services. This is a QuickBooks Online subscription, and it is the Plus subscription, if I'm not mistaken. So let's go through how we would allocate the cost of services for a service-based business. So first, I do want to show you what the P&L report looks like right now. And then I'm going to clean it up, and I'm just going to show you the report from one day so you can see the difference between cost and sales, okay? And then your overhead as well. So let's take a look at the P&L. So currently, the P&L is going to today's date, July 6th. But we're going to change those transactions, and there's nothing in the system right now for July 6th. So from January 1st of this year to July 6th of this year, this is the P&L. And so here you can see that there is income, and there's multiple types of income. And then you have your cost of goods sold. And the cost of goods sold is $405. Now, just looking at this as an accountant and a trained eye, myself and my team can tell that the cost of goods sold, or cost of labor, or cost of services is not included in the gross profit margin. And so it's truly distorting what the gross profit margin is. And basically, in layman's terms, that means how much did you pay to make X, right? How much did you spend in order to make X? That's what we want to show. We want to see that very clearly. We don't want to have to guess. And the difficulty with small businesses, especially if you're doing your own bookkeeping, is the manipulation of those numbers and that data becomes more taxing, more difficult, because then you have to export this report out and then make manipulations in Excel, do other calculations, formulas, so on and so forth. That's more of an advanced process, and I would not encourage that for the small business owner who is not a certified accountant or bookkeeper. And really, I wouldn't encourage a small business owner to do that unless bookkeeping or accounting is your business, because that's not what you got in business to do, right? You want a professional to go ahead and get those numbers for you. But what I'm going to do here today is show you a shortcut that you can use even if you don't have a professional helping you out. Something that you can do on your own, and it's as simple as setting it up correctly, and you'll be able to see your numbers clearly. Okay, so the first thing that I like to do is create a new account in the chart of accounts called cost of labor. So let's go new. The account type is a cost of goods sold. The detail type is cost of labor, okay? And the name is cost of labor. And then we're going to save and close that, okay? And then the next thing that I like to do is go into sales and into products and services. For service-based businesses, if you're not doing a full job costing and you're doing kind of a, let's call it a mock-up of job costing or a simplified job costing, I encourage you to create a non-inventory part service for each of your employees, okay? So now let's go ahead and add a new service or new non-inventory item, okay? And let's name it after your employee. His name is Steve Johnson, okay? And then we're not gonna add anything here in the SKU number, although you can add the employee ID if you want to, but it's not necessary. And if you want to really get fancy, you can add the employee's picture here. But again, that's not necessary. Then we're going to select the category, and the category is going to be landscaping. So basically, I'm saying that Steve Johnson only provides landscaping services. Okay? I sell this product or service to my customer. Yes, you do. Let's call this landscaping. Actually, because I want you to see what it is. So let's call it the employee sales rate. Okay. And that price is $50. And the income account is going to be landscaping services. It is not taxable. Okay. And so let's put it as non-taxable. We're not going to check this off because the other side of this equation, I'm going to show you shortly. So now let's save and close, okay? So now we have our employee as a product / service. And so now we want to go ahead and invoice a customer, okay? So let's go to new, let's go to invoice. And let's invoice Red Rock Diner. And for the sake of this tutorial, everything is going to be due on receipt. There's no crew number here. And the product is Steve Johnson. Okay. And the quantity is 10 hours of landscaping services for a total of $500. Okay. And then we're going to go ahead and save and close this invoice. So now what we're going to do, so we've captured the sale of Steve's time and our landscaping service. Now let's capture the cost of Steve providing that service. So let's go ahead and enter a journal entry. The reason why we are entering in a journal entry is we are assuming third-party payroll. Okay, so let's say that you do payroll through Gusto or ADP or Paychecks, Patriot, so on and so forth. By the way, I discourage QuickBooks Online payroll. But let's say that you're using a third-party payroll, which for my clients is pretty standard. And so I use a journal entry payroll template to upload the payroll, bi-weekly, weekly payroll. Okay, so let's call this journal entry number 7/6/2020 payroll. And let's go ahead and enter in the cost of labor. And that is, Steve did 10 hours and we pay Steve $30. Okay, so that's $300. And let's say that the pay period is from 6/29/2020 to, actually, let's put it in like this, pay period 6/29/2020 to 7/5/2020. Okay, and then the credit is your bank account. Okay, so there goes that journal entry. Now let's save and close this journal entry. Okay, now to make this report more robust so you can see the difference, we're going to go ahead and add a couple of bills. Okay, so let's go to new, let's go to bill, and let's enter in a bill from Hall Properties for our monthly rent. Again, due on receipt for the purpose of this tutorial, and let's say the bill number is 70620 rent. Okay, and the rent is $1,500 a month. And let's save and new. Let's add another bill. Let's enter in a bill from Brosnahan Insurance Agency. Okay, due on receipt. Bill number is 70620 INS. And it is insurance, and let's say that the amount is $241.23. Let's go ahead and save and close. Now, let's take a look at the reports. We're going to look at the report up to 7/5, and then we're going to look at the P&L just for 7/6, and we're going to see the difference between the two reports. Okay, so even though this report has more data in it, you can see very clearly that this is income and this is cost of goods sold, okay? And then you have your expenses. And here in this example, this cost of goods sold is not reflective of the income. It did not cost $405 to earn $10,200.77. So now let's take a look at the example that we just created, and let's see how that report looks different. Look at this. So income, landscaping services, $500. Cost of labor is $300. So it's saying here that it cost us $300 to make $500. That's just for the cost of labor. Okay, we can go deeper in more videos on cost of material, equipment, all of that allocation. But for simplicity purposes of this video, we can see very clearly that it cost us $300 to make $500. That means that our gross profit is $200. What does this mean? We have $200 to pay our overhead, and the hope is that it's much less expensive and we can have a net profit versus a net loss. So here it's showing a net loss because we have $1,741.23 in expenses. Now let's go back, just for the sake of this video and for positivity, let's look at this with a net income versus a net loss. So let's go and add more non-inventory parts, items, services, employees, and let's bill some more customers. Okay, so let's say that this employee's name is Ernest, Ernest Yellow. Okay, and the category is, let's say, okay, we designed some fountains. And this is again, the employee sales rate. Okay, and let's say that the price of these services is $100 an hour, and the income account is design income. Okay, it is not taxable, and save and close. Okay, now let's go ahead and invoice another customer. Let's see. Okay, Bill's Windsurf Shop. Okay, due on receipt. Let's say that Ernest Yellow. Okay, that rate is 100. Let's say that the design was 40 hours. Okay, so let's save and let's save this. Okay, and then let's X out of here. We're done. And then let's go ahead and enter in that journal entry for the other side of that, the cost to provide the design services. So let's say it's 7620-1 payroll, same date. It is cost of labor. Here we go. And let's say that Ernest is paid $20 an hour times 40 hours. Okay. And let's say it is pay period 6/29/2020 to 7/5/2020. Okay, and then we're paying them out of our checking account, and we are going to save. And then we are going to close out of this. And now we're going to go back to the report. And open up a P&L. And put in the date of 7/6/2020 to 7/6/2020. Let's run that report, and now look. We have design income of $4,000, landscaping services income of $500 for total income of $4,500, cost of labor $1,100. So it cost us $1,100 to make $4,500. That gives us a gross profit of $3,400. Okay, we have overhead expenses of $241.23 and $1,500. That leaves us with a net income of $1,658.77. Now let's just take this just one step further. I'm going to go ahead and customize this report, and I want to see the percentage of income. Okay, let's run this report, and now our gross profit is 75.56% of our total income. Okay, so the cost for us to provide this service is only 24.4%. Okay, this is something that you can take a look at very easily, and you can see it and you can say, okay, I'm not spending too much on my cost to provide this service. Okay, and if you are in a product business, you can see your cost of goods sold and see right away that it's not costing you too much to provide this product. Okay, we can go deeper, and we will go deeper in future videos. But for today, this is our how-to video, how to allocate cost of service in the simplest way, okay, without doing a very deep dive into job costing. This is how we can show the cost of service. And this is how we can see clearly how much we're spending to make $1, okay? Thank you so much for tuning in, and I hope to see you again next week, Wednesday. Have a good day.